Guys, so that was a cool lesson from Bennett there. What you guys are going to see in my class is that there's a lot of overlaps. There's a lot of different ways to trade out there. My charts, let me show you really quick what my charts look like. As you can see, there's not really a whole lot going on my charts. I like to keep things really simple and clean, and that's what you're going to see in today's presentation. So this is a class that I've actually done probably a million times over the years. I've been trading for almost 25 years now, and um, when I started, there wasn't a lot out there as far as education, especially when it came to something like technical analysis, which was kind of viewed as voodoo back in the day. And so I had to adapt, and that meant being self-educated to a great deal. I have a background, a history in the arts and in science for analysis. I was an archaeologist, and so patterns and recognition and seeing things over and over again, these came pretty naturally to me after, well, spending my whole life studying them. And so as I was going through trying to find out, how can I pick out truly strong levels for placing trades in the market? It wasn't as simple as, hey, use this indicator and it will trigger a buy and go ahead and get in, and here's your stop and here's your target. Well, as one of the questions that we saw earlier, and I'm not seeing my, oh, there's my chat. One of the questions that we saw earlier from one of the folks was that, what do you do when your system just isn't performing anymore? And this is because the market goes through these phases. So in certain phases of the market, you're going to see these setups that will just blow you away, especially when you're in a really strong trending market. We're not in a strong trending market right now. We're in a correction phase in the market. And that means a lot more back and forth, topsy-turvy type of action, and you've got to adjust. So it doesn't mean your strategy doesn't work. It just means it might not work on the time frame you're trading on. So maybe if you're a swing trader, for example, your same strategy might work intraday. It's just not working anymore for you as a swing trader. Or it might only go to what would traditionally be your first target level, versus something that could lead to an incredibly strong trend. And I'm going to touch on that here in my class, because this is a strategy that I've been teaching for about 20 years, maybe a little more. And it was one of the first ones that I honed down. And it's going to have a lot of things in common with other strategies that you've probably heard from other traders. You'll see a lot of, hey, that's kind of familiar, and hopefully you'll have a lot of aha moments as well as we go along. So let's dive in here. So David, I have an hour. Gonna pick on you guys for an hour. So I want you guys to take a lot of notes in here.
Yeah,
And
you have a full hour.
awesome, cool. It's, the last time I gave this class, you guys, they're like, okay, you've got essentially 20 minutes. I'm like, whoosh. How do you cram so much data into a short period of time? So I'm going to be able to show you guys a lot here. So a phoenix is a name of a reversal strategy, and it's not a full catch the falling knife type of reversal. It is the first continuation strategy in a brand new trend move. So this is just a very, very basic template of what a phoenix looks like. So what we're looking at here, I'm going to grab a pen, is you want something that's been in a trading range or something that's coming off of a downtrend, where you have preferably a series of slightly lower lows. That's really good because you're getting the momentum starting to shift there. And then what you want to see is a nice momentum move to the upside. Now, it's actually best if this move is not a really steep impulse wave. Let me show you, for example, what an impulse wave would look like. So here, for example, this move, this is an impulse wave. We had some news here moving forward with the election transition. That news just came out, but you know what? The market already knew. And the pattern I'm going to show you is the Phoenix here. So I was actually trading this right before we went into class here. So you can see we have this downtrend. We've got this upside move, but it's actually pretty average trend type of move. It's not a steep impulse move to the upside. So you'll get Phoenixes with steep impulse moves, but it tends to limit the follow through. If you have an initial move where it's actually kind of an average move, let me just put this. This is our market right here. Whoops, sorry guys. I'm going to kind of move it over to the side. Let me get this little small chart down here. You guys can see what we got going on. So what we have is that move to the upside. I'll grab my pen again, where we're heading on up, heading on up. And then what we're looking for ideally is a two-wave correction. Now, the interesting thing about this pattern is that the main qualifier we're looking for on this correction is simply that it is slower than that upside move. So we want it to be more gradual, not stronger. So we don't want a really sharp downside move. We can have two moves where the first one might be slower, the second one might be a little bit stronger. Oftentimes that will lead to a Phoenix that has a pattern you guys are probably familiar with, a head and shoulders or inverse head and shoulders in it. So essentially though, our Phoenix is just that first main continuation in a brand new trend. Has to have two wave correction, you guys. If it only has one waves of correction, the problem is that even if you get a trigger, like with a channel break, it can still go and do a second pullback. But there's a lot of other things that can help you avoid that false first break and also prepare you for the exact time that the breakout is going to happen. So one example, for instance, is if you look at this upside move here, and then we look at the correction phase, here's our two-wave correction that we just saw happening on the ES. And in this case, you know, the overall two-wave move here, I'm going to make this a little bigger for you guys. So the overall two-wave move here has some pretty sharp impulse moves to the downside on it. But if we go and take these two channels and then we transect or cut through the middle of these channels, what do you guys see? What happens with that overall momentum? It's changing, right? We're getting a slower downside correction. And if you look at how long this upside move took, and then compared to the correction that's forming, what we want to see is that correction be 1 to 2 times as long as the amount of time that it took to move higher. So if you got an upside move, in this case it was only like 2 minutes, but if you got an upside move that's like 30 minutes, you want your correction to either be 30 minutes or 60 minutes. If it is 30 minutes, it could be a false first break. It could be this move here, right in the middle. It could be that false first move on the upside. So if it goes twice as long, that's actually a better spot. But there's another thing that we can look at for time development for this pattern. And that is, look at previous lows. So if you have this rounding going on and you notice there's, say, 30 minutes here between these two lows, you know what? A great spot for that next breakout is going to be in another 30 minutes or so. So essentially, you got a little bit of an inverse head and shoulders on this one. But the patterns don't have to be a head and shoulders. That's just one variation of how a phoenix can play out. There's a lot of ways. So for example, we could see it play out where you get more of this V bottom happening, like you see up there on the top. You'll get the downtrend, you'll get a V pivot, and then you'll get a two-way correction. The problem with this particular phoenix is that this V could create a situation where the breakout coming out of the phoenix is actually slower than the bounce off of the lows. And if your downtrend is not that well formed yet, it could be the two-wave correction that could even lead to another continuation on the downside. So like the question regarding, hey, you know, I was doing really great and then my system is no longer working anymore. Well, in a situation like here or here, these phoenixes down at the bottom, which is this pullback on each of these have a much better shot of going higher. So you can get something that will have a really strong trend coming out of those phoenixes. And in some cases, the momentum can be even stronger than it was on the left side of the phoenix. So here I'm highlighting the whole phoenix in every single one of these. And this one even has a baby phoenix within it. We also call this a check mark in here. Kind of looks like a square root symbol in the middle. And so, you know, if you're looking at things like more rounded lows, then the odds are higher that your phoenix could start to trigger a really big trend reversal. And so if you're taking these setups on like a daily time frame, well, maybe there's no longer good setups on a daily time frame. Maybe they're setting up on like a 60-minute chart or 20,000 chart or something that's smaller in intraday. And it doesn't really matter what you're trading, you guys. I've traded pretty much every market under the sun, darn close anyway. It's no livestock, so you know. But about everything else I have traded over the years. And there's really not much that I've changed on any market. Some of them, if they're too thin, I need to go up to bigger time frames to trade on them. Other ones, I just stick to something, you know, smaller. Like right now, I'm working with a lot of students that are just learning to trade the futures, the index futures. So I'm working with them on trading the micros. And some of them, of course, have moved on and they're trading, you know, the E-minis, but we're trading micros, even micro gold. I don't know how many of you guys trade micro gold, but micro gold is another one that's out there. So what you can do is something like this. When this is your phoenix, your stop is right under this base. So you could easily be at 4 times what your risk was when you just hit that first target level. So then if you got a trend that is just starting to develop, you could easily be in something that is 20 times what your risk potential is. And I'm going to show you a number of examples of this, and we're going to go into a lot more detail. So if this looks kind of like esoteric and subjective here at the moment, hopefully as we move through this, you're going to start to pick up a lot of tips. So here's one that is really similar to the first example here. And in this one, what I did was I was originally looking for just here as kind of a first initial resistance zone. We had some previous lows here, some congestion, and it had that V bottom here. So the two wave corrections right there, two wave pullback, I was looking at, possibly just hitting like a measured move as a target level. And then you've got to take into account, well, what's going on the larger time frames? Does it warrant holding to a bigger target level, or is this something where it might be like rolling over on a bigger time frame, and this could actually be turning into something that could break lower? So you always have to go up on time frames, and this chart here, this is just a 100-tick chart. So what I usually recommend is if you're going up on a time frame to check out your placement of your trade, go up about like 6 times and then double that. So like 600 tick and then a 1200 tick. Look at where your trade is at on those bigger time frames. So for example, here, if we already have this 2-wave move down and then we've got 2 measured moves coming out of that one, that's a pretty good trend exhaustion move. This is like a classic reversal for a trend where you'll get one main leg down, you'll get a 2-wave correction, and then you'll get what I call just a 1, 2, 3. And then at that point, it's very, very common that you will get a stronger turn at that point where it won't just be a minor correction that then goes to continue lower. So that's important to watch, and you're going to see some of those details here as I go forward. So let's move on. I'm going to show you some other examples. I threw a whole bunch in here for you. So here's another one that this was just from this week, and or not this week, I guess this was maybe a week or so ago, right before our symbols turned over. And what I was looking at was the overall momentum here. See how strong that is? Nice 2-wave measured move down. It repeats it with a 2-wave measured down. And then we get this 2-wave again. Hey, look, it's the same pattern, you guys. The move down, the 2-wave correction, and then the 1, 2, 3. But this overall move shifts it. And so then at that point, we have a move, it's kind of midway between this one and the one over here. So you've got that rounding going on, and then you got the phoenix hugging it at the top. So a phoenix like this can even go into a bigger phoenix over here and create a much larger setup. So these are things that you can build into, and they're usually going to have much stronger reward than just something where your phoenix is right coming off of a bottom with a V. So really good example. Sometimes on some of these you might not see the detail in here really well. You might not see the 2-wave correction. It was here and then here. That mid low in the middle, I know it's really small. I'll show you guys this bigger here in a minute, but that's actually part of the second correction in this 2-wave correction. So something like that, you could just use a channel break to get into. I'm going to show you some examples from some of my traders that have like crazy perfect entries. That gets into more of the advanced stuff I teach, but you'll see some of that stuff too as here as we go forward. So here's another example, kind of, halfway between the two. But what's happening is that overall your momentum is shifting. Notice the nice spacing between these lows, almost exactly the same. So that's one of the things that we like to see. So I'm going to go through traits here. So here's where you can take some notes again. And the first ideal trait on a phoenix is that trend development that I alluded to earlier. And what that means is that if you are further up on an uptrend, let's say, for example, flip it back and forth between my mouse. So here's a 20,000 tick, for example, in the ES. This is a great example from a trade I had the other day. And here we had our downside move. Instead of the 2 waves, this had 3 waves, and then the shift here. So you see that shift happening, double bottom. And then here's the phoenix. So this was actually pretty good in terms of like the 20,000 tick location for it. But the one thing that you can see right away is that it struggled with the momentum. And this is how we can tell kind of like right away if the trade's going to perform well or not. Now this is happening overnight here. And what you want to see is you want to see immediate follow through on a phoenix where it's really strong as it gets going and basically picks up momentum. But look at this upside move. See how it's a 2-wave move here, but the overall impulse move is actually really strong. It's not that average to slower than average move. So that's actually a con here when this is happening. So even though our trend placement is good, it has a con with the momentum on that initial move up. So we get our phoenix setup, our 2-wave pullback here, and then actually it's another 2 smaller waves in here. But that con impacts the continuation. So this is something I ended up going, and you've got to get a little bit tighter on as far as taking gains on something like that. I'm going to show you a lot more to do with momentum here as we go forward. But this is, one example with trends. If we go up to say, well, here's our 40,000 tick. What you can also notice on the 40,000 tick is that phoenix was right here. So look at all of this that came before it. We basically had the first biggest correction here that took place. So not only did we have like a con with that really rapid move up there, but our trend placement's not good. So there's this big bull trend here with 3 main legs up. So very good trend exhaustion. I know Bennett talked a little bit about Elliott wave. I do things a little bit different than you probably see on main Elliott wave. I use a lot of 2 waves more than 3, for example. You'll see that a lot as we go forward here. But a number of underlying things are still going to come into play, like this example here with our trend exhaustion. So this little bounce here, yeah, we had good support, but how far could it go? How much momentum is it really going to have after this really strong, deep V move back off of a 3rd high? So it's harder. It's not as great. On the other hand, down here, you do have an extreme momentum move up, but you've got a shift in momentum, 2 traps, and so this is actually a really good location where a phoenix could happen. But with that extreme impulse move up, it didn't really even get the time to do a phoenix, and you wouldn't have wanted to have seen a phoenix that would have come out as long as we would have needed for it to do that, because that would have meant that our momentum really isn't confirming, and then it could have just gone like this. So it actually had a different pattern here than a phoenix. Best pattern, this is something I call a momentum reversal plus, so it did have another really great reversal pattern, but just not the Phoenix one. Now down in here though, you might have gotten some really small Phoenix setups. So if you're looking for a reversal of the trend on a really big time frame, if you drop down to your small time frames, you might find some really good setups like the Phoenix that can get you into a bigger trend move like this. You just have to keep in mind where you're at on that bigger trend there. So your trends development, very, very important, you guys. And I use some different entry triggers than a lot of traders are used to. A lot of traders are taught, hey, you buy over the high on a breakout. Like for example, if this were a cup with handle, you would buy over the high of the handle. No, I don't do that. That's not good. The reason for that, the reason I say that is when you're entering like here, which would be like above this break here, the problem with that is that you've got this whole zone here. Now, target levels on a Phoenix for like the 95% chance of hitting type of target level is going to be a measured move, this upside move, and then a measured move to here. Again, we saw with a V bottom, it could have more trouble, and if it's a really strong move up, it could have more trouble. There's ways that a really strong move up can still go and have a nice continuation, but that gets a little bit more confusing, so we're not going to go into that right now. But there's a lot of details that you can learn on this to get a zillion different entries as you get more advanced. Think of it like learning a new language, you guys. If you're dropped off in a foreign country and you don't know the language, it's easier to start to learn basic conversation like, hello, how are you? I'm fine, thank you, how are you? And, you know, kind of go from there. Well, this Phoenix is like that. It's not going into the slang language. It's not going into more in-depth conversations on like astrophysics or anything like that. But technical analysis gets to that level. And I like to think that with everything that I'm teaching and learning in the markets, that there's always a reason that something happens. And I might not know what it is yet. I might not be able to put it into words yet. I might not have back tested it yet or tested it, you know, on live markets yet. But there's always some reason as to why something is happening. And the more you learn about it, the greater your confidence becomes. You know, you might be more confident starting to read a foreign language than you will speaking it, for example. And another analogy I like to use is like if you're following the markets, it has a structure, like sentence structure. My kid is in third grade and he's learning about different sentence structures, you know, verb, adverb. So you go from like article to adjective to noun to verb, you know, like that. And the market has structure like that. But then you can get into really complicated sentences. However, what you don't tend to have is something like article, noun, adjective. Spanish goes backwards. Spanish, you've got the adjective after your noun, but you don't have that in English. So we need to learn the language of the market. And if you're trying to apply something that's not really the market's language, it's not going to quite work out so well for you. And you might say something really funny if you're doing it in a foreign language, but if you're doing it in the markets, that could be painful financially. So keep that in mind. I don't like that entry point. Better entries are going to be to use a channel break, especially a channel break if your momentum has changed. So in here, you might even get like a little baby Phoenix right here, you guys. So there might be a smaller Phoenix coming out of that second correction there. And you can catch that Phoenix. You know what that means? that means your stop can be right under here. And you can have this huge move to the upside. Also, if the momentum is slower, you could use just this overall channel like this. This is usually going to be a two-wave channel on the pullback. In fact, these all tend to move in twos. Two-wave up, two-wave down. This might be really fast, up, and then two-wave back down. So you'll see that repetition over and over again. And sometimes it's three, as far as like the impulse move side of things. So sometimes you'll get three up, but usually it's two. What you don't like to see very often is, let's say if this goes up one and then it just kind of changes momentum like that, you guys, that's not going to be as good. It can still go into a phoenix, but it actually might even widen up and be like a megaphone type of phoenix. Again, that goes into something a lot more advanced than we have time to go into today, but I want to show you, the possibilities. So treat this like the cat ran after the ball sentence, and learn that sentence and the structure for that. And then learn to go from there. Does that make sense, you guys? Sometimes I like to call out folks that are hanging out with me as I'm teaching. I'm like, hey, you got any questions as we go along? I don't know if these guys are recording this or not, but hopefully you're taking notes as we go. So here's another example. And in this case, we have, this V that's happening, but we also have this extended downtrend. And in this case, we've got the three main waves in the downtrend. You've got your main wave here that has two in it. You've got a correction. Then you've got another wave down that actually has three in it. And then you've got another correction. It's about the same amount of time as the correction over here. And then you get your third wave down. And then you're exhausted. So it's not a full V bottom, but it's enough that you can see when the Phoenix originally triggers here, it struggles to get going. So the nice thing is that if you look at this whole channel, it's playing around in the upper end of that channel. That is one of your notes you should be making. So in your trend, your Phoenix is going to try to hang out in the upper half of that trend channel. Okay, you guys? Now you might have it where it comes down here and then you got to bounce and it's trying to hang out in the upper part of like this smaller trend channel to give you a baby Phoenix that can go into a bigger Phoenix, but you want it in the upper part of that channel to have the best chance of success. So you'll find exceptions, but if you make that a rule, that's what's going to get you into the 95% category for going for those measured moves or more. So this is doing that. And then it shifts even better, really nicely here. In fact, if this were more of a V and it just did the smaller base, it might pop up a little bit. And because this is so strong, do another base and then take off. So that's one of those versions I was talking about. That's another variation. And we often see smaller phoenixes into bigger phoenixes. And this is where I said, if it doesn't go at 30 minutes, it can go at 60 minutes. So it can double to even be bigger phoenixes. So these can go incrementally larger and larger. And you can literally nail the market highs on daily and weekly and monthly timeframes just by dropping down to these smaller and smaller timeframes as you're coming into key levels on the larger time frame. And I've done lots and lots of trading live for the past 23 years. So tons and tons of proof out there if you go scour the internet that you really can do this, and you can do it live, and you can do it on many, many multiple time frames. If you go to my YouTube channel, actually just look me up on YouTube. You'll find I put a number of just like free things that I do on Fridays up there, and you will find many of those will have setups that'll trigger during the class, and I will walk you through details one step to the next of exactly what we were looking at, and we'll have been doing it live. So I always like to have the actual proof there where you guys can see it. So here's our Phoenix. Let's keep going through here. So here's another one. Look at how that's in the upper channel there. And this could have even gone into a bigger Phoenix over here. But see the shift in the momentum, the trend development. Look, 2 waves down, then the shift. 2 waves again, then the shift. 2 waves again, and there's that extra 2 shorter ones in there. Momentum, of course, very, very important, you guys. You need that slower momentum shift. So while the initial momentum at the high, like right here where it gets started, maybe that starts off quickly at this pivot high. Maybe it comes and pulls down really quickly, but you need this overall channel to be more gradual. So you can see that here again. And then here. So here's a trade from one of my traders. This is one of their trades this week. And this is a Phoenix. They took it all on their own. And these are their actual execution points, you guys. I'm telling you, you can get really, really detailed in terms of being able to analyze this market to the exact high and low. So here is, this was coming into trend exhaustion. So we had this V happening. You get the 2-wave correction in here. It came up and it shifted. And in this shift, we had a stronger move down here and then 3 lows and a double tap. This is a more advanced entry. Now, if you look at this upside to pullback, what do you guys notice for that time development? What's going on? How long does that pullback take compared to that upside? I'm going to play like the Jeopardy theme song. Yeah, it's a 1-to-1 ratio. So what does that mean? Who remembers? What does that mean? It could be an early entry. It's a green light, yes, but it might struggle at this previous high, or even if it makes a higher high, it still might struggle. So if this is coming up here, what you want to see is as it gets to about the halfway point of this impulse move, that is a very important do or die point, you guys. So for this to keep going higher, it has to just pause here. Do like a little kneecap here and then continue immediately to that level. So then what they were looking at was the pullback into the retest area. So you'll notice that they got really aggressive with this. Protected gains as it hit that halfway mark. And then they added back as it came back into this zone. Now this is actually very aggressive entry here. So I basically never use a break-even entry or a break-even stop if I have to, because it can go and do a second correction, and that second correction could take out that previous low. So this is too early to really facilitate easy continuations because it's not quite at that 2-to-1 ratio of the upside to the correction. So what that means is that this becomes a higher risk entry. So how did they compensate for that? Well, when this came back into the previous high, you can see here's a little baby Phoenix here, came into about a measured move, they took gains again. So they're basically playing this whole reversal, but they're limiting their risk on it as it breaks. So what you would want to do a safer entry is wait for the next two-wave correction, wait for the time development here and here. So this pullback and this pullback to be about the same, which should be about twice this upside move. And then that becomes your prime entry zone to drill down to your smaller time frames to look for your entry. So what they did was they took some smaller channel breaks. Again, this one, they took some off at that previous high. Don't really need to in this case, but you know, if you want to be a little bit protective, especially if you're learning a new setup, it's a great spot to take something off. And then they added back. And then you get the measure move target. And in a strong trend reversal, this can go and do corrections that can actually keep going. So really great, beautiful example of all of the things we talked about. Usually volume is going to be declining in here too. So you can put your volume on your chart as well. Let's go through here a little bit faster. Gosh, I tell you, I could teach this class for ages, right? So another thing to watch is look at previous zones of congestion. So like here, this is the reverse of a phoenix, which is an avalanche. And you can see the phoenix took about the same amount of time. So that's a really good thing to watch. So here's another one. These corrections are all about the same as the correction for the phoenix. Here's another one where I took it too early again, knowing I was too early. And I actually popped it on a reverse for that next pullback before getting back in again. But if we look at the time development on it, what I'm looking at is this as kind of like my first low here. Second low, third low, inverse head and shoulders. This, whoops, that got a little crazy. This correction is about the same amount as this correction, but when I had the first two-way pullback where it was just like a 1-to-1 ratio, it was too soon. I didn't really have a great placement yet for that to get going. So it meant that I could be too early. So when this kind of wasn't immediately following through there, I went ahead and got out of it. And then there was actually a little baby reversal pattern there. And this is why this low as a stop wouldn't be a really good stop. It didn't break on this particular one, but sometimes this will just go and it will do a megaphone and it will go to that lower low as it works out, that time correction. So if you're too early, you could easily get flushed out. So entry points we just covered. Here's some examples. So you can have multiple entry points, and these could be where you build a position. Like maybe you're trading 3 contracts. This is the euro dollar. Maybe you're trading 3 contracts. Maybe your time development is not good yet. So you take some here and build into it and wait for that better time development. Or maybe you do something where you go all in and then, you know, you're see, time development's not working out, it's kind of going slower, so you take some off and then you add back in when things kind of look a little bit better. So different ways to manage that. Here's another one of my trades. So you can see I've got a Fibonacci fan on here and I don't have the numbers marked, but that big black line is a 76.4 and it's a really good zone for looking for a phoenix to trigger at. So what I like to see then is here's my first correction. Here's the base and then here's the second correction. So these are my 2 waves down. And then here, I get that little bitty baby pause where the momentum is shifting. I could have taken this a little bit earlier with just the channel break here. That would have been that first entry trigger I showed you guys on the template. But since the momentum was pretty strong and it kind of pulled a little bit through my fan, I wanted confirmation with the momentum first. I didn't need confirmation with the channel break. That wasn't necessary. What I needed was confirmation coming off of that low. I needed that to come up a good third of this pullback here. And that confirmed that, hey, any smaller setup like the little baby phoenix here is something that I could take. Now, hit measured move really easily. And then you'll notice you can even get, more detailed in watching measured moves to get a little bit more out of the targets. Here is another one. So you can see I used a couple different entries, and the momentum was really strong here. So what I was looking at was the potential that this could actually go, since this was a V, that this could be a fake breakout even though it was strong, and that it could base like that before it got really going. And so I took part of the trade off here. You can see the momentum started to shift. This is the 50 Fibonacci fan. And that 50 Fibonacci fan, if it jumps off of that 76.4, the 50 is a pretty good level of resistance to watch for. You can see it even hit it again up here. So when it did that, I started to look at, building into a position if it could go and do a continuation, and it just didn't do that. So I used the two-way pullback here into support. Again, waited for some confirmation in there. Bought it. Momentum was so strong, didn't really give me a reason to get out until it hit the 100% there. Then I took some part, added back in, and then now I had the measured move, but now it's hugging that 61.8%, which means my momentum is changing. So this flipped the trade at that point. But I got more than 100% because of the way the momentum was playing out. Let's see. Got about 10 minutes left. So stop placement, you guys. Use under the low, the last low in there. And here's a couple examples. So as it's moving forward, you can actually keep tighter and tighter stops as you get smaller setups that are confirming there. Now, if this is something you're looking for, a really big reversal on a larger trend, and you're not just looking for like a 1-to-1, then you'll have to keep your stop lower, because you need to accommodate for, potential corrections, like if you're too early or something like that. But generally speaking, you can move them up pretty quickly like that. Here's another way that I do stops as they're coming into support levels. So for example, with a Phoenix, I know that I need this fan level to be holding. So as it's moving higher, instead of just putting stops under the lows, I'm moving it up along that channel or fan. Some of you guys might use like moving averages. And as I get like key corrections like this, then I might make it tighter. So what would have happened here is that when I added onto this, if this had done like another secondary correction there, I didn't want to hold the add. So I kept my stop very tight on the add part, but the rest of the trade, I kept the stop under the fan. So I actually had two different stops there, where my add means that I'm only looking to take a very minimal risk. And then I got the bigger portion with the bigger stop. So here's another example here. What I want to show you on this one though is look at how tight this range is. See, bar by bar by bar, very, very thin. What happens on something like this is that if you kept your stop right under that range, this could go like this, choom, choom. We actually had that happen today. I had a much bigger stop, but we had that happen on something I was watching. It gave like a little false entry. I think it was probably the NASDAQ. Gave me a false entry, pulled back, and then I took it because I liked it after it did the flush. Because it gives it like a more distinct second low too. So that can help. We don't always get that flush though. So it could be something you take part, keep a bigger stop, and then if you get that flush, then go and enter. So target again, measure move, we talked about that. So this is like the most obvious target, but then like I said, you know, these phoenixes, they can go into bigger phoenixes and the trends can just keep going, but you just may have to hold through a bigger correction before that happens. So make sure you adjust stops accordingly. So you need to compensate for two-wave correction before you might see another continuation. So if you move your stop onto like a first low that you see and think holds, well, it could very easily take it out on the second correction. A lot of times though, you know, especially on a rounded channel, we're going to be looking for more than that 100%. So if you get a phoenix that's coming out of a range, you know, maybe this is a trading range here. Well, your phoenix target is very small. Maybe your bigger impulse moves, maybe it looks like this. There's your phoenix, but you've got really strong impulse moves over here. So your phoenix could be triggering a bigger bull flag. So you could have substantially more upside, but taking that phoenix as your entry and not like a channel break on your bull flag. So here's a good one. You got nice rounded lows. So these are some typical targets, but it goes way past a typical target because now you're looking at retracements compared to that overall pullback. So your phoenix is way down here. That little measured move is like nothing in the grand scheme of that bigger trend. Here's another example of a phoenix where see how that gets really tight in there and the bars are kind of overlapping? You get your volume dropping down, which confirms it. But then look what it does. Boom, and then pops back up. So I don't like to take something that goes into really tight base and then you might get like a little nugget of a pop there that might trigger you. I would rather wait for the flush if I can and actually get that second lower low in there. So you guys, I've given you a lot of examples here and I want to share with you some more from some of my traders as well and some of our trades this week too. But I run a kind of a club, I guess you could say, where what we do is it's basically daily lessons every single day at noon. We do live trading. I walk you through the markets live every week. We focus on one aspect of the market. And this is just something I do on the side of my trading. So we have this really nice community where I get to teach you guys. We have Thursday night student study groups. So like, it's kind of like TA type classes, right? So, you know, as you get to certain levels in your trading, then you start helping out the newer traders too. And so you get different takes on how I trade, but learning the same thing. And what you'll see is that in our League of Traders, we have a Telegram channel that's open 24/7. I'm in there at all kinds of ridiculous hours trading. And Jason can agree. Jason will know that. What time is it there right now, Jason? Yeah. So yeah, so 12. So I'm here at all kinds of ridiculous 12 p.m. Yeah, I'm here at all kinds of ridiculous hours. Yeah, so in here, basically I teach you all of my strategies, everything I do. You get to learn all of the really super advanced stuff. I do recommend taking it slow, going sim, of course, when you get started learning with me, because there might be a lot of things that you've learned from other people that overlap, but it's a new language. You know, it's a very intricate language. We start with basics like the Phoenix, and you learn the building blocks like momentum and time development, and is this support really a strong support level, and how everything works together. You know, you learn the structure of the language first, and then you learn all of the different patterns, because the market really flows from one pattern and one strategy into the next. Like if you learn the Phoenix, you're going to learn the next pattern that's likely to come after the Phoenix. You're going to learn the pattern that is most likely to come before the Phoenix. You're going to learn the whole language. So what we do in League of Traders is we basically get to have that language immersion going on. Every Monday we have Mentor Monday, which is one specific class at noon Eastern, where we address one part of the market. And throughout the week at noon, we cover that part of the market live and how it's forming now, and what we're expecting, you know, in the future based upon how it's forming. And yeah, so lots of, you know, different reviews here. So you see a lot of different Phoenixes and measured moves and all kinds of stuff that you'll see actually live. You get to trade with a master. Yeah. So you guys, League of Traders is not ran for profit. I pay my support staff to run the website and to run all of the back end stuff and everything like that. So I keep everything charged low, but enough to cover for them. So I want to make League of Traders available for you guys for a month to check out here over the holidays, especially as so many of you are stuck on quarantine now too. So you can join us for 1 month at $50. That's it. $50. This is like a single trade on the micro NQ with 2 contracts as a day trade. And what you're going to get in that month is essentially what a lot of people are putting out as like $4,000 and $10,000 systems. You're going to get logs that go back a month. So you'll have like 30 days of classes. You'll get access to Telegram, which is where you can interact with me. Like I said, I'm here like all day, basically. And you can ask questions of me. You can ask questions of other traders that have been trading with me for a couple of years. I even have a couple of traders that have been in there that have traded with me on and off for 20 years. So, and nights, right, Jason? And nights too. I've got a lot of folks I hang out with down under. I'm actually in Tucson, so it's like opposite side of the world here. But yeah. So you guys, here's a little bit of an overview of what I do. And a lot of you know me from